Let's also bring on board, of course, Dilip Bhat, who's the joint MD at Prabhudas Lilladher, who joins in on the show now. Mr. Bhat, thanks very much for being with us. The markets are trading in a positive zone over the last 4 days. The VOA is out of the way. It was largely a non-event. What would you advise one to do ahead of the all-important elections that come up over the next couple of months? What would be the index strategy in a way?
Sure. I think, personally, I think that maybe in a run-up to March, markets will continue to face headwinds in terms of selling probably slightly at a higher levels. So at these levels of around 6,200, 6,150 to 200, we probably will see some selling. And possibly markets will remain vulnerable to come down to 6,000 or maybe lower than that. I would rather play for a pre-election rally, maybe a little towards the end of March or maybe after March. That's where probably I think things can look up, as we probably will get a few more poll projections, which probably seems to be consolidating in favor of one particular party at the moment. But very frankly, I think one should still have a little more defensive approach, a little more cautious approach running into the elections. And I think because I really feel that the headwinds in terms of the economy, the way the world is panning out, the way the things are happening overall, the growth doesn't seem to be anything great anywhere else at the moment. And with the tapering off also in place, I think we should be a little more cautious and defensive rather than play for a spectacular ride. Even if that happens, I think my own feeling is that it may not be really sustainable.
So, Dilip, what is the best way to play this pre-election rally? Should one simply buy into the Nifty, or it's time now to really revisit cyclicals and economy-related themes, ideas and sectors?
Nikunj, sure. I think one way would be to play that Nifty as a part of the overall theme. But as what we always have believed, that a stock-specific approach is what we really need to go into. Cyclicals I'm not really a great fan of, because I think there are too many moving parts in that. There is China, maybe there is India, there is the global markets and all those things. So I'm not too sure about the cyclicals. But I would still play on a stock-specific basis something like a Larsen & Toubro, which I think looks very good, defensive in nature, but can really garner a good amount of orders, and the executions also possibly will happen in a much better way. So that's one stock which we like. Wipro looks pretty interesting from the current levels in the major caps. Tata Motors also looks pretty interesting, even from the current levels. I think that stock can still give at least 15-20% returns. And maybe a little mix of mid caps like KPIT here, or maybe Pure Cummins in the mid cap space. So some of those things possibly I think one should look out for in a mix of frontline and the mid caps.
Like KPIT Cummins, they came out with horrible set of numbers. If I map what they've reported for the quarter gone by, nothing short of a howler.
Sure. I think what we really think is, as far as KPIT is concerned, we think that going forward over next 2 to 3 quarters, we'll see a very gradual but definite recovery, and results definitely headed northwards. And I think that's a company which is still generating a reasonable free cash at the moment and still having a decent ROE, but the valuations are still available within a reasonable zone at the moment. So KPIT is one, and I also would like to add something like NIT also in the mid-cap space. But KPIT, I think the next couple of quarters will see the turnaround.
There is a ET now impact, there is a ET impact, but there is a Dilip Bhat impact on the TV, because KPIT Cummins as we speak has appreciated by about 2%. So Dilip Bhat, are your clients buying the stock as you speak? Are you aware of something which you would like to share with us? As you speak, the stock is up 3%.
I think, Nikunj, it's not really also amongst our top picks, because my analyst at the moment is not very convinced on this particular thing, but I'm broadly talking about for a medium to long term, Nikunj. So that's what my perspective is at the moment.
Right, Mr. Bhat, I just want to get in a word on the banking pack as well. Just comments were coming in from the banking secretary that if need be, for next year, the recapitalization could be over 11,000 crore rupees as well. Do you think we're going to see the situation, especially in the PSU lot, get a lot worse from the current levels as well before it gets better?
Well, on a headline basis, I think as far as the NPAs are concerned and the PSUs are concerned, SBI did not give a lot of confidence. So extrapolating SBI and putting the same thing on to the other PSU banks, I think this NPA problem probably is going to fester for some more time. And as economy continues to be in the trough, and a lot of people are calling a bottom to it, it may be a bottom, but I think how extended this U is, we don't know, and I still believe that this U flattening will continue for some time before it goes really up. So that being the case, I think the NPA issues will continue to haunt the bank. So in that sense, I think the private sector banks look a lot more safer place, though valuation-wise they are hardly giving any comfort. Because my own belief is that in the banking space now, if some NPAs really have to happen in a big way, those will be the big names, and that will swamp even the private sector banks. So I think both remain vulnerable, but I think the private sector banks as a strategy still remains a much better place to be in.
So which one should one buy, Dilip? HDFC Bank, which is still expensive, or ICICI Bank, which has corrected quite sharply from the recent high?
I think I would go for ICICI Bank definitely from the current levels. I would go even for something like Axis Bank. I think it's reasonably okay, but the main issue is, of course, the NPAs will hit them also. But also there is the impending sale of shares, which probably will bring enough liquidity in the stock and will satiate the demand. So I think ICICI Bank looks good. I would still go for something like a Yes Bank. I would still go for something like an ING Bank in this particular space.
All right, Dilip, pleasure to have you, and I certainly look forward to see much more of you going forward.
Always a pleasure, Nikunj. Thank you so much.
Okay.